Hey guys, what's going on this week in real estate market? We have the pleasure of sitting with Adam from Flagship Home Loans, coming in with Sean and myself. He's a loan officer with one of our branches. Services a lot of central Pennsylvania, eastern, really anywhere, but mostly central Pennsylvania. So have a little insights in that area. Sean, a couple of weeks ago, you mentioned about the administration. Trump had some plans for what's going to be happening, what he feels. Now, we've had news this week, last week going into it, kind of your crystal ball that you had, kind of your insight. So let's go through some stuff that he was announcing. Let's go through some fresh stuff from last week and the week before.
Well, I think the first thing that came out was the ban of large institutional investors buying single-family homes. And it's important to there's a lot of pushback about this, but it's important to know exactly what it is that he's talking about.
Yeah,
it's a ban on large institutional investors, the biggest investors in the country, that are buying single-family homes. We're not talking about multifamily homes. We're talking about single-family homes and what that does to the real estate market. So right now there's roughly 600,000 homes that are owned by these large institutional investors in the United States. Locally here in the Lehigh Valley, in even parts of Jersey and in central Pennsylvania, it's not a big deal. So I don't necessarily think it's going to affect our inventory levels here locally, increasing inventory. But they could have, in the next year or two, start to moving to central PA and to the Lehigh Valley. So we're preventing something from happening that would shrink our inventory.
It's more like a preventive maintenance on our side.
Correct.
Getting ahead of it.
The reason why it's a problem is because Atlanta, Georgia, for instance, in 2022, somewhere around 80% of the homes that were purchased were sold to large institutional investors.
Wow.
So it takes, what we've been talking about for weeks now is the first-time home buyer, affordability, and how it looks for somebody to buy a home. They can't compete against those investors.
I think that's probably those REITs that you see that has a lot to do with that. Your Black Rocks, your things. Do we know what they're doing with these properties when they buy them?
They're renting them out.
They're renting them out.
Yeah, they're turning into rentals. And we're one of the things that, and we haven't spoken about this yet, but one of the things that is threatening the United States is turning us from a homeowner's country to a renter's country.
Yeah.
Right. So the more we inventory shrinks and the tighter the market gets, the more people have to rent. The affordability, when it's up here, when it's affordability rates are too high, it makes people have to rent.
Yeah.
So we don't want to turn into England, right, where 70% of the people that live in England rent their home.
I've even heard it compared to what they called the Italian model, where most people in some urban areas, they're only able to own properties if it's familial and generational.
Oh wow.
Yeah. And also, even if it's not directly impacting our market, there's an indirect impact, because what we are seeing is people from the urban areas that aren't able to purchase houses in that area coming out to central Pennsylvania because there is an opportunity for them to find a home. So even if the investors aren't directly buying in, say, central Pennsylvania, we are still having feeling the impact.
I think of that too. Like I have a lot of my regular investors. I have one really good friend of mine, Brad, I went to high school with. We just had I think we did his 10th or 11th property. And he's utilizing HELOCs on his other ones to buy, which is a great tool. And he's now looking central Pennsylvania. The last one he just bought for, I think, $78,000 was up in the coal region. Had to push out a little bit. He said Lehigh Valley is just, I can't. Right. It's hard to cash flow those. So the interest rates and the affordability. You had a stat too, Sean, I think, somewhere with the available homes.
So I just looked at numbers yesterday, which I do every week in the markets that we service, and one of the things that was really telling is right now in Lehigh County, Pennsylvania, there's 172,000 housing units in the county.
Okay. In Lehigh County.
Pennsylvania, and there's 294 that are currently listed for sale.
Wow.
Which represents 1/10 of 1% of the available homes in Lehigh County are listed for sale. So you want to talk about an inventory problem? That's less than 2 months of inventory.
I say it's Wow.
right? So normal whenever any day I look in the MLS, I would say going back 5 or 6 years, I would look in the MLS and it'd be 1,500 listings available, right?
Yep.
Or 750 per for Lehigh County. We have 294 listings.
Wow. Now, do you feel a lot of that is seasonality, or do you think it's just a lot of people just sitting and waiting? Do you think it's more? It sounds like it's a lot less than normal.
There's a lot, and I'm really looking forward to what this administration is going to do in the next month or two with housing.
Yeah.
Because I don't think we're done here with large institutional investors. I think there's more to come.
Yeah.
We could talk about the $200 billion in mortgage-backed securities. And capital gains. Like I really think something's going to be done with capital gains.
Yeah.
But the biggest thing locally in Pennsylvania, my belief is that we are a huge state. We have a huge population of senior citizens.
Yes.
That are kind of stuck in their home. And think about it like this. If you're in your home for 30, 40, 50 years that you bought with your spouse passes, you are, usually what you do is you move on, right? You sell that single family home and you go somewhere else, you buy something else, or you move out of state or whatever. They can't. They're stuck because of cap gains. Because valuation levels have gone up so high, right, that they're in their home for 30 years that they bought for, let's say $50,000, and now that home is worth $400,000, $500,000. They got to pay cap gains on that.
Yeah.
Right? Because they're single now. So $250,000, limit, they're going to make more than $250,000. They're going to have to pay taxes on that.
Yeah.
And then they're kind of frozen in what their property taxes are. They might be at $4,000 a year. So whatever they buy is going to cost them, if they went into a 55 and older home, 55 and older community, it's going to cost them $600,000. They're selling a $400,000 asset.
Yep.
They're paying capital gains on probably $200,000 of that.
Yep.
And then whatever they buy, it's going to go from a $4,000 real estate tax base up to a $9,000. That's our biggest problem in Pennsylvania.
Yep. Yeah. And that's their one of the guests that we're going to have on at some point too, talking about legislation for that. And the affordability of that. And I was doing some research too, and Adam too in Central PA. I'm sure it's a lot of the same. It just kind of goes out that way with what Sean was saying. That age, that demographic, owning those homes, staying in their home. That's what I can foresee. Reverse mortgages, which always had a black eye, which aren't horrible. I know you've done a lot of reverse.
Well, that's what I was just going to bring up, Matt. I mean, we've had this conversation many times over the past 2 years between Matt and I, where there are very practical situations where someone would just like to downsize, and they're going, they're reducing the value of the house by close to 50%, and it's not changing their monthly payment. Yeah. It just because of where the interest rates are.
Yep.
And the reverse mortgage was the only way that we were really able to find solutions for those people.
Yeah, they're fixed income, which isn't going as far with, it's not catching up to inflation, and the interest rates. So that's one avenue. Now Trump did say too, getting on that about mortgage-backed securities, $200 billion with a B, that he was saying that he would like the government to purchase. So when mortgage-backed securities, when they're purchased, it has to do with quantitative easing, quantitative tightening. The Fed does this, and this has an impact on your interest rates. So we've seen this before, which will bring those rates down. To what degree, we really don't know. There's not a dollar in, dollar out for that. But again, to your earlier, with what they're looking to do to try to solve this affordability problem, that might help out a little bit. We'll have to see. But
what are the steps in that? I don't know anything about the mortgage-backed securities. Yeah. That's your realm, your guys' realm. But what are the steps for that to take place? And then how quickly are we going to see an impact on rates?
So that's a great question. So it's kind of a tug of war. So what's going to happen is when you have them purchase the mortgage-backed securities, they're a buyer in the market for those. That affects the yields on those mortgage-backed securities, which drives them lower because you have a buyer for it to go through. It has to do with liquidity of what's out there. Just like we talk about housing, bringing some housing to the table that will bring some prices down because you have more to pick from. It's the same thing.
It's supply and demand in the bond market. It's
exactly.
increasing. It's increasing the supply.
Yep. Yeah. So, and the tug of war I mentioned too, because Adam and I see this all the time doing mortgages. It's going to be, what does the market feel, with the quantitative easing and then the purchasing and of those, and adding some supply to the expectations of where those mortgages are going to be with inflation. Mm-hmm. So those wild cards are still going to be there. So there's, in a normal market, if we didn't have the inflation that we are still kind of getting out of, that would be a major impact. But to the earlier, I don't know, just as much the institutionals like in our market, I don't know how much that's really going to help us too much. I mean, every little bit counts.
Exactly. Without the inflation, the math is pretty simple. We kind of know how that's going to move.
Yeah.
With the inflation, that's kind of the wild card.
Yeah.
Yeah. There's not a one solution fix to solve all of our, the issues that we have with the housing market. There's multiple things that have to be worked on.
More and more as we do the market updates and we track the rates, the ability to predict how it's going to react, you just realize more and more that you can't predict it, because by the time we're talking about it or digesting it, the market's already moved on. By the time we receive the information, the market's already reacted. So
that's a good point.
Staying in front of it,
yeah,
it's not really possible.
Catching a falling knife situation is trying to do it.
Yeah.
Well, we'll see. I mean, I know going into, now we're into January. I mean, going through, I've been gangbuster busy for the most part. With buyers coming in. To Sean's point, just here in Lehigh County, and I'm sure where you're at in Central PA too, it mimics it to a degree as well. I mean, we're all in the same boat for the most part with the inventory, and getting out there and getting your home listed. If you want to think about selling, sell. If you want to buy, more buyers, in my opinion, are coming back out. They're coming back to the market.
I see it, even though it doesn't necessarily feel like it to some buyers. I don't want to say the tides are shifting, but I do feel like buyers are gaining ground, sellers are losing ground. They're still in the driver's seat.
Yeah.
But for people that have properties that are unique, or if it was a buyer's market, like for example, if somebody has a log home or a unique type of property, now's the time to do it. Where you're not going to have to possibly have the inspections, and you have people that are not necessarily going to go off of appraisal values for unique situations. Now's the time to do it.
Yeah.
At the same time, we're seeing some increase in inventory in some, especially the higher price ranges. Mm-hmm. So lower talking 10 months of inventory between $700 and $1 million.
Yeah.
That's a lot. So, my conversations with my agents is, don't be afraid to write offers.
Yes. That's what we talked about last week.
Right. We're seeing homes sit on the market longer and longer. Don't be afraid to write an offer. You don't necessarily have to pay full price. You don't necessarily have to, waive inspections. Write offers.
Write them. Absolutely. It's a different market than it was, and that was our last week's podcast, which was phenomenal. A lot of good info on that one too, just as much as this one. So, and lastly, I just wanted to touch on too, just because it happened like recently with the whole Fed Chair Powell, he's leaving. The Trump administration, they really don't play well in the sandbox at all. And that's putting it lightly. We're trying to be PC on that one. So there will be a new Fed chair coming in here. They're going to be elected. Of course, Trump will be electing them. Now, they still have to vote on rates, and there's a committee that does that. So I've had a lot of clients about refinancing, and they're just going to wait. I'm going to wait till the next Fed chair's in, and then I'm going to pull the trigger then and see. But I reiterate, it's not just they can just say, we're just going to cut. There are going to be pressure. There's going to be pressure on the committee to cut. Mm-hmm. But it's a democratic type of a voting system.
Sure, so. But what's going to be interesting is the previous Fed chairs and everyone in the Fed, they're very careful about what they say.
Yeah.
They call them Fed whisperers, right? And you kind of have to read the tea leaves, and there's all this language about trying to understand what the Fed's saying, and so much of the market is moving based off of those whispers and reading the tea leaves, far more off of that than it is what the Fed's actually doing. It'll be interesting to see what the next person in that position, if they take that same approach.
I didn't think of that, Adam. You're exactly right. Are they going to be reserved?
Because they can be more influential by what they say versus what is actually executed and voted on.
I really didn't even think of that. That's going to be really interesting to see. Yeah. A lot of good stuff to come. So, if you guys have anything else, but that was a really good recap that we had going through the last 2 weeks, guys. Every week we try to do this, letting you know what's going on, the real estate, our market. Adam, thanks for joining us this week. So
pleasure to be here.
If you're in Central PA or anywhere really, and you need someone, Adam Brunner over at Flagship Home Loans, Sean LaSalle, Coldwell Banker, always here to help, get you guys informed, and we'll catch you guys next week. All right. Perfect.